Nvidia's stock is currently trading at $201 as of 5 a.m. ET on April 26, 2026, marking a 0.52% decline during the early session. This movement follows a significant 18% surge over the last 10 days, which finally pushed the price back towards its October 2025 all-time high after a grueling 6-month period of sideways consolidation. While most investors are watching that $212 level as the ultimate test of strength, the reality beneath the surface is shifting toward a massive transition in how artificial intelligence is actually used in the enterprise. Most of the market is still focused on the simple act of training models, but we are entering a phase where the agentic AI inflection point is dictating the next wave of hardware demand. This is why Nvidia stock continues to be the primary focus for anyone looking at online investing, as the company isn't just selling chips anymore, they are essentially selling the blueprints for autonomous business systems. The expectation from the retail crowd is that as long as big tech keeps spending on data centers, Nvidia stock will keep climbing in a straight line. However, the reality is that the Chaikin money flow, which tracks institutional buying and selling pressure, has struggled to break into a sustained positive zone recently. Large-scale investors are showing a level of caution that doesn't always show up in the daily price swings. If you look at the options market, the put-call volume ratio has climbed to 0.78. That's a significant move from the bullish fever we saw earlier in the year. It tells us that traders are no longer just speculating on another massive jump, they are actively buying insurance. This shift from pure optimism to defensive positioning is a natural reaction to global macroeconomic pressures, specifically oil prices staying stubbornly high and the Fed keeping interest rates in a restrictive territory. For a high-valuation growth name like Nvidia stock, those interest rate levels act as a constant gravity, forcing the stock to prove its worth through absolute earnings dominance rather than just sentiment. In the current session, we are seeing Nvidia stock battle with a specific technical setup that has analysts on edge. We've seen a head and shoulders pattern forming on the short-term charts, with the recent rally potentially acting as the right shoulder. If the price fails to break through the $202 to $205 range and instead slips below the 172 support, the technical neckline could break, leading to a much sharper correction than most are prepared for. This is where the divide between the retail hype and the professional desk activity becomes clear. While the average person might see a small dip as a simple buying opportunity, institutional traders are watching volume bars and the Chaikin money flow to see if the big players are actually stepping in to defend these levels or if they are letting the stock drift. Comment below how many shares of Nvidia stock you currently hold and whether you're adding more at these $200 levels or waiting for a deeper pullback. When we look at the broader landscape of investment help and the tools people use to navigate these waters, platforms like Schwab Intelligent Portfolios or a standard individual brokerage account at Fidelity or Robinhood have become the front lines for this volatility. For those using self-investing strategies, the challenge is separating the signal from the noise. The signal right now is that the data center revenue for fiscal 2026 hit a record $215.9 billion, a 65% increase year over year. That is a staggering figure that most companies can't even dream of. But the market has a "what have you done for me lately" mentality. The expectation for the next quarter is a revenue target of $78 billion. Anything less than that, even if it's a record, could be seen as a disappointment because the valuation is priced for perfection. Institutional activity suggests that the easy gains from the initial AI infrastructure build-out are largely in the rearview mirror. Now the focus is on the transition to the Blackwell Ultra and the upcoming Rubin architecture. The Blackwell platform is delivering massive performance leaps, but the supply chain remains a bottleneck. We are seeing capacity constraints in high-bandwidth memory, or HBM4, which is the specialized memory required for these high-end GPUs. Even if Nvidia stock has the demand, they can only sell what they can actually manufacture. This creates a ceiling on growth that isn't about the technology, but about the physical reality of chip fabrication and packaging. This is why you see professional wealth management teams often balancing Nvidia stock with more diversified Fidelity ETFs or Fidelity mutual funds to mitigate the specific all-in risk of the semiconductor sector. If you are using a Fidelity trading platform or the Robinhood app to manage your own portfolio, you have to realize that the volatility in Nvidia stock often spills over into the entire market. Because of its massive market cap, it influences the S&P 500 and the Nasdaq more than almost any other single entity. When Nvidia stock sneezes, the whole market catches a cold. This is particularly true for those involved in online investing through SoFi Active Investing or Interactive Brokers Trading, where margin levels and high-frequency algorithms can turn a 2% move into a 5% cascade very quickly. The current intraday movement of minus 0.52% might seem minor, but it reflects a market that is waiting for a catalyst to decide its next major direction.
To understand where we are going, we have to look at what Nvidia actually does beyond just making GPUs for gamers. Their business model has transformed into an integrated software and hardware ecosystem. They are launching platforms like AIQ and Nematron, which are designed to help companies build autonomous agents. This isn't just about a chatbot answering customer service questions, it's about AI systems that can execute multi-step business processes independently. This agentic AI market is projected to grow from a small $9 billion niche into a nearly $200 billion industry over the next decade. Nvidia is positioning itself to be the sole provider of the picks and shovels for this gold rush. This long-term vision is what keeps many investors holding through the volatility, even when the short-term technicals look shaky. Historically, the company has operated on a 24-month architectural cycle. Ampere in 2020, Hopper in 2022, Blackwell in 2024, and now the anticipated Rubin in 2026. This tick-tock strategy of major leaps followed by ultra refreshes ensures that their customers always have a reason to upgrade. However, the reality of 2026 is that the macroeconomic environment is much more hostile than it was during the Hopper launch. High interest rates make the massive capital expenditures required for these data centers more expensive for companies like Microsoft, Google, and Meta. If these hyperscalers decide to slow down their spending even by a few percentage points to protect their own margins, Nvidia stock could face a significant headwind. This is the reality that often clashes with the expectation of infinite growth. For those looking for investment help, it's worth noting how different platforms handle this sector. A SoFi robo-advisor or the automated tools in Schwab Intelligent Portfolios might limit your exposure to a single stock like Nvidia to prevent overconcentration. Meanwhile, active traders on the Interactive Brokers platform or using Robinhood fractional shares might be doubling down, betting that the Rubin architecture launch will spark the next leg of the bull run. The tension here is between the long-term secular trend of AI and the short-term cyclical nature of the semiconductor industry. Memory prices are already starting to spike, with some configurations up 50% since last year. This increases the total cost of ownership for AI servers, which could eventually dampen demand. Looking toward the future, the primary catalyst for Nvidia stock will be the May earnings report. The market will be looking for confirmation that the Blackwell ramp-up is proceeding with further delays, and that the agentic AI shift is showing up in the order books. The risk is that if the global economy slows down further, or if geopolitical tensions in the semiconductor supply chain flare up, the current valuation might not hold. But the opportunity is equally large. If Nvidia proves it can maintain its 80% market share while moving into software and autonomous systems, the current $200 level might eventually look like a bargain. Ultimately, the contrast between expectations and reality in Nvidia stock comes down to execution. Investors expect perfection because that is what Jensen Huang has delivered for years. The reality is that maintaining a 75% gross margin while the entire world is trying to compete with you or build their own internal chips is an almost impossible task. Yet so far, the company has defied the gravity of the business cycle. Whether you are using Fidelity investments, SoFi investing, or Robinhood investments, the key is to stay grounded in the data. The current price of $201 is a reflection of a market in a holding pattern, weighing the massive growth of the past against the structural challenges of the future. The authority in this analysis doesn't come from guessing the next 5% move, but from understanding that the foundational shift in computing is still in its early stages, even if the stock price needs time to breathe. As we wrap up this look at the current state of play, remember that the agentic AI transition is the real story to watch over the next 12 months. While the daily noise of the market might distract you, the institutional fund flows and the technical levels around $172 and $212 will tell the true story of where the smart money is heading. Stay focused on the volume and the Chaikin money flow to see if the big players are truly backing this move. Whether you are a veteran using Interactive Brokers or a newcomer starting with Robinhood stock trading, the principles of expectation versus reality remain your best guide in this fast-moving market. Understanding Nvidia's 2026 roadmap, Blackwell to Rubin. This video provides a deep look into the specific hardware milestones Nvidia is hitting in 2026, which is crucial for understanding the reality of their product cycle versus market hype. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.